now the
Good morning, traders, friends, and welcome back to the Altrady channel. Another live session together. I'm Dmytro, and as always, with me is one and only Raffa. Hey, Raffa, how are you? How are you today?
Hey Dimitro, all good here. Hello traders, hello friend. Welcome back to the Altrady channel, another live session together. So yeah, I will say that the markets are anything but calm these days. How are you, Dimitro?
Yeah, I'm good actually. Yeah, market now is calm, thankfully. Yeah, but what was that last week? Yeah.
Yeah, it was such an incredible day. Even when, they seem quiet on their face, there is always something boiling underneath, especially after that recent crash that we saw on Friday. So today we are in a very unusual situation, guys, because hold tight, the most important macro data, the ones everyone is waiting for. Let me show you our calendar here. Everyone is talking about the PPI, core PPI are not coming out because they are all canceled, even the unemployment data from the United States of America. They should be released tomorrow, but they are all canceled. Why? Simple, because the US government shutdown is officially underway. And as long as the Bureau of Labor Statistics remains closed, no new data will be released. So, yeah, we are trading blind right now, like flies in the dark.
Yeah, and actually, funny thing is that for once that might actually be a good thing, because no more macro surprises and no new panic triggering headlines. Because yeah, after the apocalypse we witnessed last Friday, I think we had enough excitement for a while. Yeah, and our portfolio is getting red a bit. Yeah, Rafa.
Yeah, exactly. And those who were with us live on last Friday know it perfectly well. What a day, guys. What a day. Markets in free fall. Liquidations everywhere, full chaos mode. But as we say during the stream, that was not the time to panic. It was the time to act strategically. And as we anticipated, just look at what happened since then. Let me show you on our Altrady. Powerful technical
Our
rebounds
beautiful platform.
across.
Yeah, Rafa.
Yeah. All we can see a major rebounds across cryptocurrencies, Bitcoin, Ethereum, Solana, and so on. So all have bounced back strongly, proving the market is far from that.
Yeah, and that's actually the beauty of today's crypto market.
Yeah.
Because a few years ago, after a crash like Fridays, we would see weeks of depression, no volume, no confidence, and so on. Now it's just 2 or 3 days later, and boom, short squeezes, inverse liquidations, and violent rallies. The entire market is much more liquid and reactive than it used to be like few years ago, 4 or 5 years ago. Yeah.
Yeah, you're right. Wise words. And technically speaking, what we saw was a textbook short squeeze. The volatility last Friday wiped out over leverage positions, but didn't break the underlying trend. Anyone who understands market microstructure could see it. This wasn't fundamental panic selling, it was a liquidity flush orchestrated by market makers.
Yeah, exactly. Stop losses triggered in cascade, and margin call left unhedged. High frequency trading bots flipping positions, and all these mechanics create a temporary dislocation between price and actual value, and that's exactly where opportunity emerge for those who stay calm.
Yeah, that's true. That's true. And guys, where retail traders panic, professional act. So, and last week was the perfect example of that principle. So, let's have a quick market analysis here on our wonderful Altrady platform. So, let's jump into the chart starting with the king Bitcoin daily time frame. Of course, here is the daily chart. After dipping to 110,000 in full panic mode last Friday, look at this candle. Look at this. Bitcoin has now reclaimed the 115 area of conviction. Now it's dropping a little bit with the Wall Street opening. But guys, look at that long lower shadow on the crash candle. That's pure accumulation by strong hands.
Yeah, well said, Rafa. Absolutely, the overall structure remains intact, and this correction was purely leverage driven, not a macro shift. Yeah, so I think as long as we stay above 105,000, the mid-term trend is still bullish. So on the 4-hour chart, so we have the daily chart. Yeah.
Yeah,
Uh, so yeah, if we click on if we click on the 4-hour chart, you can also see a clean bullish engulfing pattern forming. And can we add RSI? Let's see what we have on RSI.
sure.
So what do we see there, Rafa?
Yeah, I'm seeing the divergence, seeing clearly divergence, higher lows on the RSI. So that means someone is accumulating volumes are high and the price is stuck here. But we can see a big, as you say, bullish engulfing today at 2 p.m. And yesterday at night, we have seen nice rebounds here. So exactly, we keep an eye on the 117, 118 zone. This resistance, that is where key descending trend line crosses. And if we get a breakout with solid volume in the next days, the next session, it could open the door to a new all-time high attempt, but is still early. And also note this open interest has rebounded by 12% since Monday. So it's a clear evidence that traders are re-entering the market with long exposure. For Bitcoin, I think this is enough. I would like to move to Ethereum and have a look on Ethereum as well. So the rebound here has been slightly weaker than Bitcoin, but is still technical solid. Ethereum had broken below the 100 moving average day, as we see, but managed to reclaim it, and it is now holding above the 4,000.
Yeah, exactly. And Rafa, can you zoom in a bit this chart so we can see it a bit closer? Yeah. So this zone right here, yeah, between 4,150 and between 4,200. So this zone is really crucial between them. It's where we have a confluence of resistance levels. 50-day moving average, static resistance, and if we can see it closer, a short-term descending trend line. So if Ethereum breaks this area with strong volume, we can expect a quick move toward 4,400, 4,450.
Nice, nice. Yeah, yeah, I agree with you. We can see that the macro strong support dynamic trend line is still on. We had fake breakout here with liquidity sweep on the static support at 3,400 and then rebounds back. And one more technical note I would like to show you guys is the Ethereum Bitcoin ratio that is bouncing from a key support around 0.034, around that. Historically, when this cross starts rising, it often marks the beginning of a period where altcoins outperform Bitcoin. But for now, the short trend is still short. As we can see from August, Bitcoin is outperforming Ethereum. And just a quick recap on the other major altcoins. Solana is up around 9% from the lows. ADA Cardano is up around 7%, and Ripple is up around 6, if I'm not wrong, 6%. But what is more interesting is the flow rotation in the past 48 hours. We have seen significant outflows from stable coins into higher beta assets.
Yeah, agree with you. That's a clear risk on signal. And yeah, historically, when altcoins start bouncing hard across the board, it often anticipates a broader recovery. So yeah, those who bought Solana at 165 actually nailed it as a textbook entry. Now the first resistance to watch is between 165 and 170. So yeah, we can check Solana. Let's see Solana.
Yeah,
So yeah, uh, we can see it here. Yeah, exactly what we just
yeah,
said.
correct. Yeah, yeah, you're right. All right. Yeah, nice, nice analysis. Chat time, guys. Mm, what did you did? I mean, what did you do in these days? Who bought the dip? Who panicked and sold? And who went full gangster and bought during the chaos on Friday? Drop in the comments. Would like to see what did you do, and let's see who is got diamond hands today.
Yeah. So now what we gonna talk next, Rafa?
Yeah, let's me see. Guys today are a bit quiet. They don't want to expose anything. They are too shy. Okay, guys. Anyways, let's go for like macro political context. Now let's zoom out to the macro picture because, as we say, the U.S. government shutdown is on a minor detail. This event means no official economic data on inflation, the producer price change, and no unemployment and growth will be released. So the market is literally flying blind right now. No data.
Yeah, it remind me something like sailing through fog without radar. So yeah, something very similar. But yeah, here is the twist. No data doesn't mean no information. Actually, traders are shifting to alternative proxies, so real-time RAN data, private ICM surveys, and corporate reports from major tech firms. So all of these points to moderate economic recovery. But still, yeah, inflation remains sticky at around 3.2% core.
Yeah. We can see here from the chart. This is the PPI. It's low to 2.6% in August, year on year, but the average is around 3%. So that creates a fascinating paradox. Less data, guys, less emotional market reaction. In the past, every PPI or CPI release goes like panic sell off or irrational pumps. But now the market is briefing, observes, and moves more technically.
Yeah, but watch out once the shutdown ends and data starts coming out again, volatility will come roaring back. So it's like compressing a spring. The longer it stays locked, the harder it will snap when release.
Yeah, exactly. And that is why planning ahead is essential, guys. If you wait for the news to act, you are already too late. If you plan your scenarios in advance, you will be ready when volatility hits, like on Friday. So the mindset lessons for today is discipline and strategy. So this brings us to the today core message, that is discipline, because as we saw on Friday, right, those who improve get wiped out.
Yeah, and very wise words right now. Trading isn't about luck. Yeah, it's about probability and risk control. Because single wrong click, too much leverage, or missing a stop loss, and your account can vanish in minutes.
Yeah, yeah. And we always say this, guys, the market doesn't punish technical mistakes, it punishes emotional ones. So those who follow their plan and bought it in discount zones as already back in profit today.
Yeah, and we need to also remember that volatility isn't the enemy. Yeah, it's the trader's natural environment because you need to learn to surf the waves, not run away from them. So those who stay calm in chaos are the ones who build consistent success over time. Very wise word, I believe.
Yeah. That's true. All right, guys, so let's wrap it up with today three key takeaways. So the US, let me open the where is it? Let me open my window. So the US shutdown halts economic data, but not the market. And Friday's crash was technical, not fundamental panic. And this week's rebounds prove that the market is alive and now ready to move higher.
Yeah, and above all, remember this: trading isn't about improvisation, it's about method, discipline, and emotional control. So, those who stay calm during chaos always win in the long run.
Beautiful, say Dimitro. So, guys, thank you for spending this short time with us on Altrady. Keep studying, stay focused, and remember the next setup might already be forming as we speak.
Yeah, guys, stay sharp, stay calm, and yeah, most importantly, stay crypto. And see you in the next live trading session, traders. Bye bye.
Bye, everyone.